Please welcome Marco Celani, CEO at Italianway, Steve Milo, CEO at Vtrips, Henrik Kjellberg, CEO at Awaze, Roger Mueller, CPO at Interhome, and moderator Piers Brown, founder at International Hospitality Media. About the panel, inventory growth strategy, M&A versus organic.
Okay, welcome everybody. I'm here to make these guys look good and for you to get as much out of this 30-minute session as possible. To help these guys, can I just ask for a show of hands, property managers in the room? Okay, good. There we go, that's your audience. Okay, just brief introductions. We're going to get through this quite quickly. I'm Piers, I run a business called IHM. We publish shorttermrentals.com. No cost to subscribe, rentals with a Z, and delighted to be here. And also, Paul Stevens hosts the 𝗵𝗄𝗄 Awards, which promotes best practice within the industry, and the date for that is the 26th of April in London. Okay, Henrik, brief introduction, please.
I'm Henrik, encantado de estar aquí en Málaga. I run a company called Awaze.
Steve Milo, I'm the founder and CEO of Vtrips. We're out of the United States, 7,000 properties under management.
Marco Celani, CEO Italianway.
I'm the Swiss, I'm Roger, I'm the CPO of Interhome Group. We have about 35,000 products in the portfolio.
Super, thank you guys. So we're really going to focus on how to grow your property inventory, either from a merger and acquisitions perspective or ultimately organic. And everybody up here is super active at the moment with how they're growing the business. Some are from a mergers and acquisitions perspective, some are organic, and some is a mixture of the two, which is quite interesting. So I'll start with yourself, Henrik, obviously CEO of Awaze. Why is there so much, I won't say pent-up demand, but why is there so much activity in the M&A space?
Well, I think the category is, it's very highly fragmented, and I think consumers have discovered just how wonderful it is to go to a vacation rental home. And so as the consumers have discovered just what a great holiday it is to be in one of these properties, I think the market has woken up and said, like, well, this is an interesting category. And I think that's where you're seeing a lot of capital being deployed into the vacation rental category.
Steve, you're active as well?
Yeah, I mean, it's clear that this category is the future of travel. So millennials and younger prefer alternative accommodations over hotels. So this is the future, and also category awareness has increased significantly after COVID-19. So that's why the capital's coming in. I mean, they know where this category is going.
Okay, so from a capital perspective, what's on the top of their minds? When they talk to you, you had a 250 million input into your business with Hudson. Can you just give an overview of how that came about?
Yeah, sure. So initially the capital went into on the demand side. So the OTAs, 𝗵𝗶𝘁𝗀 and Airbnb, obviously that's where the capital flow went, and that built the eyeballs and the demand. Now we've seen capital go into the suppliers. Obviously, big news from 𝗨 TNS, which got a huge investment by Blue Star. And now capital's heading to the lodging side. And I actually think supply is really going to be the king here as we move forward. But, we had never taken equity. We had built the company with debt previously. The inflection point of COVID with which the last group talked about, the ADRs and occupancy and category awareness all increasing, gave us an opportunity to essentially supersize capital structure by taking in a position of equity from Hudson Hill, which is a family fund, and we combined it with a great amount of debt from a private lender called 𝗵𝗹𝗴. And so that's how we came up with 250 million in capital, which we've deployed on 10 M&As over the last 6-7 months.
Okay, super. So how does somebody like Hudson value the business based on why you need the money? And I suppose, how did you negotiate maybe the equity that they took or the debt they took? I think it was debt, wasn't it?
Well, I mean, it's just like the process that Awaze is going through. It's typically a multiple of EBITDA is how businesses in this space are valued. on the lodging side. So we can look at companies like Hilton that are publicly traded, or Hyatt or Marriott, and they're trading on a multiple of typically a forward year of earnings or the current year. You can take your pick. And those multiples have been fairly consistent. And so on the lodging side, because we are not claiming to be a technology company, we are a hospitality company. We're technology enabled, so we get a multiple based on our EBITDA. And so that's earnings before interest, and debt, and taxes, and amortization. So that EBITDA, or your forward EBITDA, is what you're going to be valued on.
Okay, thank you. I want to bring in Roger now at Interhome. Could you just explain to the audience a bit about Interhome and how you've grown? You know, you were saying that the business had started, I think, since 1968. Is it more M&A? Is it more organic? And what the market needs at the moment?
It's both. You need to grow with both organically and your acquisition. Every M&A is different, that's for sure. But actually, we are focusing locally. So we act local. We build up our own local office structure, service office structure. And of course, we have about five acquisitions per year. And we open 10 own serviced local offices yearly. So that's how we grow. So we're very local.
Marco, with Italianway, how did you raise your money?
Well, basically, we got quite a different model respect the others, and we are very local because we're only concentrated in Italy. So we raised our money to invest in technology. So we built a platform to abilitate smaller property managers to cooperate with us, and then make our relationship bigger and potentially have them entering our group through M&A activities. So basically, within the last 7 years, we only did 4 M&A transactions, and one of which last week, and we have 4 in pipeline for the next month. So things are changing, and I think that the market is getting more mature for this kind of activity. And one thing I may add with respect to why it is getting more mature is that the property manager work is tiring. So at some point, after 10 years, 15 years, people who have been doing that for a while get tired, and they may not have a successor. So they may want to sell and capitalize what they have built. So this is why this is a good moment for that.
Yeah, thank you. Roger, I want to stay with you on when you're acquiring businesses. What are the key factors that you take into account? In other words, when it's right to grow organically. I presume that it's a lot slower than the M&A side, but what are the positives to grow that way?
Actually, you have the direct contact with the owners, proprietors. You build up the trustworthy, you know them, you take care of their property, you know, their investment. You take care of the return of the investment. So you know them personally, you know. So this is very important for us. You speak the language, you help them out if there are some issues locally, or licenses, taxes, all these questions. So we're there to help out. And I think this is very dedicated and very personal. It's a people's business.
I think what both Roger said and Steve as well, I mean, it's all about supply. And so we would look at how strong are the relationships with the owners. You have to be local. Like we have supply teams across over 60 markets in Europe. And it's a big investment. Like, we spend a lot of money on having local teams speak a local language that we then back up with good technology solutions that we can, help owners, because, they also want to be able to access their bookings via an app or whatnot. But yeah, it's whether you do it organically or M&A, you kind of need to, on the supply front, you have to be there in the market, and you have to know the market.
Okay, so for the...
I sort of joke sometimes that owners are like farmers, that they're always complaining. We love our owners, but they're very particular. A home is a particular thing. They want it to be taken care of by somebody they trust. So if you manage it, so you have to be delicate with the owners. Okay,
Steve, have you looked at sort of acquiring a business and walked away at times? And could you share why you've walked away?
We've walked away from a couple different deals. Sometimes we come back to the negotiating table. But look, when an owner is looking to sell, they may not be sophisticated with their financial information. and they're going to represent to you normally, they'll through a memo, what their earnings are or their revenue, and we enter what's considered to be a letter of intent, and then we do something called a due diligence and a quality of earnings. And if the quality of earnings report doesn't verify the earnings that they're showing, then we have to either get a reduction of the price, or we have to say, look, it's not worth what you're saying, and here's the facts. So we've done that. We try to be nice about it. And if you're upfront with these sellers and you're candid and you do it in the right way, sometimes they come back, and that has happened. But yes, I mean, deals don't happen. Everybody here, I'm sure, would have multiple examples of deals that didn't happen just because in due diligence process, you discover stuff that would make you not want to continue.
Okay, so very much figure-driven. Profitability, I suppose, is very much up there, EBITDA, etc. What about under the surface, the sort of due diligence you do on the actual guest scores? And Roger, feel free to come in. Maybe come in on this, because you might ultimately look to buy a business. Looks great on paper, but there's maybe some hidden stuff that you don't know.
Just like Steve, and everybody here, if growing organically is hard and doing M&A is hard. So there's no easy way to do this. You have to have good execution in both areas. When you go via M&A, you just want to make sure that, again, we would be looking at number of properties, the strength of the relationship to the homeowners, how much those properties monetize. Then, of course, coming down to Awaze is private equity backed, so from our perspective, it's very hard to buy a business that is not profitable, because when you're private equity owned, you have a sort of a timeline under which you want to grow and improve your business. So if we do M&A, we like to concentrate on great properties with a great relationship with owners, and sometimes that comes with a local presence as well, with a high street shop or whatnot, and then we typically keep those.
Thank you. So in terms of integrating a business, property management company that you've bought, Roger, what are the challenges, when that actually happens? How do you decide, does the brand stay the same? Does it come under Interhome? What do you think?
Yeah, you look into the figures, of course, the key factors, but for us it's very important also to see what is behind the scene, Is it established? Is it the quality good of the properties? Do they fit to the portfolio, to Interhome? And then we actually decide if we have a share deal or an asset deal. So we prefer an asset deal. We put it into our processes, core system, and then we can actually market them in our name. But, it's a people's business, as I said, so it's very important also to keep the property manager behind it, or the people working in an acquisition, because they're very important to avoid to actually lose a portfolio, because at the end it's the owner who is deciding to stay or not. And that's very important. And so we go this way, and you need a little bit of tact doing this, patience, look into it and listen. It's not only profitability or occupancy rates. It's also very important to keep the people there, and especially if there's also suppliers there, because they're very important. At the end, it has to be cleaned and whatever. So this is very important to us, yeah.
Yeah, I'd say identifying the key employees is critical. Most of the companies that we're doing with M&A, the owner is leaving. They're going to get a large amount of net wealth, and they may stay on for a year for consulting reasons and continuity, but they're gone. So you've got to identify very early on who are the key employees, and in many cases, the best is to start to negotiate their compensation packages before the deal closes, because they're the ones who are going to really drive the success of the M&A.
Yeah, they tend to be local. And so you founder-led businesses typically, where people feel like they're part of a family. And then, of course, we come in, and we're 2,000 people across Europe. So the dynamic changes. So again, I think using tact and not everything goes perfect in every deal. Like there's people who loved it before, and then we will have a way of doing things, and we try to accommodate local, but at the same time, in order to get the synergies, we need to run the company as I can't have we've made 13 acquisitions in the last 12 months. So I can't be adding 13 a year and then keep letting everybody do their own thing, because it's going to become impossible to manage.
Okay, so of those 13, integrating those businesses.
It's super easy to integrate.
Yeah,
it just happens in the
asking
background.
you.
Some people in my team are doing it, and it's super easy. No, it's a lot of work.
Well, would you like to just share some of the challenges of integrating, those businesses based around, what you've done with the 13 brands?
I mean, it starts from, it depends on which area you do it. So some are actually easier than others. We bought a company called Bornholm Tours in an island where the Russians attacked a gas pipeline recently. It's a Danish island, beautiful island in the Baltic, 600 properties. We had another 700 ourselves. So, we could just easily consolidate those businesses. And other ones, we bought 3 businesses in Croatia and, slightly different business models. Those are trickier, but it ranges from how you handle the people, the culture, how you implement. And one of the things we found out is small things like putting everybody on the same Teams, Microsoft Teams, inviting them to the all hands that we have every month. We have one tomorrow morning. Making sure they get the same email addresses. Those small things, but they do a lot to kind of make people feel part of the wider family and still keep the local culture.
All right, Steve.
Yeah, I mean, the integration issues are everything discussed, email, phone systems, and then property management system is the big one, revenue management, all the hosted systems that you're using. I mean, one of the things that's critical is for us to reduce our tech stack. So, almost every business we have does things a different way, and we're coming in and we're trying to just streamline that tech stack down to a much more simplified one where everybody in the company now knows how to communicate with each other. And that's the tricky part, and I will tell you, having done integration, waiting and doing it quick, the faster you integrate, the easier the transition for the employees.
Yep.
Yeah, that's a good point. Roger, in terms of the businesses that you've bought, particularly recently, how sort of tech-enabled have they been? In other words, is the room that we see in front of ourselves doing a good job?
They do a good job. Absolutely. No, from my point of view, operational-wise, it's a challenge. You need to integrate all these products correctly, new processes, EU workflows, customer journey, owner's journey. So that's very hard, and you need time for this, and leave your time, and it takes time. 1-2 years until it really runs quite well. If you put it in a existing company, it's not so easy.
Yeah. Okay. Henrik, you touched on future guest expectations, sort of looking with a crystal ball, and mentioned, about homeowners and energy crisis and maybe some grey clouds ahead. I think we're in a great place at the moment. What are your thoughts with regards to guest expectations?
Look, we're going to keep on pushing very hard on the supply, both organic and M&A, because we just know that that's the sort of the livelihood, and so you build that for the long term. Short term, clearly consumers are going to be impacted by, I was listening to the Spanish TV this morning about electricity bills, and there's a cap, and same conversation in Sweden, same conversation in the UK, although the UK conversation gets a bit more dynamic as of the last few days. But the good thing with this category is an extremely affordable holiday, right? That you get incredible value for money. It's a staycation, so again, millennials, the whole new Gen Z, et cetera, so people it's a less carbon-intensive holiday. So we think even in a sort of more gray economic environment, this sector is going to do just great. Now, you might see some impact on pricing locally, depending on, in the UK, prices in 21 went up by a lot, so they're having to be adjusted down. But long term, the trends are, the future is very, very bright for this sector. As Steve said, the future of travel is in vacation rentals.
Marco, what about yourself? From an Italian.
I think Italy had a really incredible season this year, and we discovered the possibility to use a lot of secondary houses. We got more than 7 million in Italy, and a lot of foreign people discovered what were called secondary locations, and a lot of Italian property managers are investing in this sector and are promoting online new destinations. So I think that even with this scenario, we can have important results in the next years.
Okay, before I wrap up, any questions to ask these guys? They're around at lunchtime too, so feel free to approach them, individually if you want to. Any questions, anybody? Yeah, can we get a microphone to that? Man. Brilliant. Unless you want to use mine. Come on.
I think Piers, run.
Quick.
Kidding.
Hi. Is there a specific size of business that's more attractive to acquire, and why?
And you are Matt from Pass the Keys asked that. Any particular, Matt, who do you want to ask?
I can answer that. I mean, I think we're looking at markets where there's opportunity for unit growth. So we're looking at markets where there may be the ability for new construction or new development, in particular, where there's land available to continue to grow the inventory. Also, you're looking at revenue, the revenue per unit, and those areas that have high more seasonality are optimal. So you're really looking at maximizing revenue per unit and areas for new development. And we're finding right now the mountains tend to have more favorable aspects than the beach.
Carlos from Vitur Summit. I've got a question for you, and it's actually nice to have you here, Steve. Is there, you see a difference between when you apply a multiple and you value in a portfolio? Is that completely different in the US from what you guys are seeing in Europe? I
don't know if they're going to give any tells on what they're paying. In the US market, we're buying companies at 4x to 5x EBITDA, so a multiple of 4, 5, or 6 times EBITDA. And EBITDA is somewhat adjusted where you'll take people's personal expenses and add them back because they're running them through the business. But that's what the US market is paying right now.
I think in Europe we're seeing, the UK is very competitive, and we're seeing less competition on the European, continental European front. There is a multiple for us. Now again, you can look at pre or post. We take that into account as well, but yeah, I'm not going to share.
See Henrik in the bar, maybe.
Yeah.
Okay, one more. Here we go.
Thank you, Eduardo Mandri, Angel Host. Quick question for any of you. When you acquire a property management company, most of them have different contracts, right? Everybody bills the owners in a different way. How do you make that happen? Do you usually get them to adopt your contract, or you continue with theirs?
We leave their contracts in place, and any new contract is based on our template. So we try to disrupt the owners as little as possible, because the goodwill we're buying is really those owner contracts. That's at the end of the day, and also the guest, but it's the goodwill of the owner, and what we've learned is one thing that upsets owners is asking them to sign a brand new contract.
We do it vice versa. We have a good contract. We try to convince them to use ours.
Okay, big thank you, audience, for your participation. And just a round of applause for everybody up here, please. Thank you.